The government has finally brought the urban and the multi-state cooperative banks under the direct supervision of the Reserve Bank of India. Earlier, there was a dual control by the state as well as the RBI. But the cooperative banks, which control less than 4% of the deposit and advances of the banking system, have outlived their utility. The time now is to scale up the tech-savvy small finance banks. Let's first understand what has changed for the cooperative banks. The RBI will now have the same power of supervision over cooperative banks as it has over the commercial banks like SBI, ICICI or Citibank. Cooperative banks have been following the prudential norms of banking like capital adequacy, NPA classification, liquidity requirement and other guidelines for more than 5 decades. But the key powers like superseding the board, removal of directors and the merger of cooperative banks were not with the RBI but with the Registrar of Cooperative Societies. This has changed now. But the bigger issue is of the relevance of thousands of cooperative banks in the current banking landscape. The universe of the urban cooperative banks has 1,500 plus entities across the country, which makes it difficult for regulators to do on-site inspection. The off-site surveillance based on data provided by these banks often leads to frauds. Most of the failures of cooperative banks is because of the fuzzing of accounts and the violation of prudential guidelines. The recent case being the multi-state Punjab and Maharashtra Cooperative Bank or the PMC Bank, which is under the RBI moratorium. The size of the urban cooperative banks is too small. Most of them are operating with a couple of branches for decades. In terms of banking business, the cooperative banks have deposits of around 5 lakh crore and advances of just 3 lakh crore. The entire banking system today has 130 lakh crore of deposits and 100 lakh crore of advances. So the share of cooperative banks is just 3 to 4% in the deposit and advances of the banking system. The cooperative banks also lack in terms of technology or the new digital banking. Their cost of operation is also very high. There are governance issues as most of these banks are controlled by politicians. Unless and until cooperative banks embrace professional management and set up responsible boards, the future of cooperative banks is very bleak. In the current banking environment, the cooperative banks have certainly outlived their utility. It is time now to think beyond cooperative banks to serve the underbanked and the underserved segment. Small finance banks are doing a great work. The former RBI Governor Raghuram Rajan had created this new institutional framework of small finance banks in 2016 to offer basic banking services such as accepting deposit and lending to the neglected segment. There are already 10 small finance banks operational in the market. Backed by entrepreneurs and former bankers, these banks have professional board and management. They are using the state-of-the-art technology and also pursuing a sustainable business model. In just 4 years, the small finance banks have mobilized deposits of 55,000 crore and advances of rupees 70,000 crores. There are already many fintech and the new age NBFCs which are serving the smaller geographies where banking penetration is very low. In fact, these candidates are best suited for a small banking license to scale up the new banking platform. The RBI has also allowed the urban cooperative banks to convert themselves into small finance banks, but not many have come forward so far. The way forward certainly is the consolidation of cooperative banks, encouraging cooperative banks to convert into small finance bank and also scaling up the small finance banking universe by giving more licenses.